Purchasing your first home or refinancing your current home are all major financial decisions that necessitate having the right person on your side. Dan French at Nova Home Loans will work with you from day one to make sure the process is as easy as possible. Contact Dan French today at danfrenchnova.com, or you can call me directly at 702-216-3907. And to learn more about home financing, please make sure to tune into the Market Snapshot every Sunday from 12 to 1 p.m. to find out all the information that's going on in financing and real estate.
NMLS number 369115. Broker number 0902429.
The opinions of the hosts on KDWN are their own and do not necessarily reflect the views of this station, its management, or Beasley Media Group.
This is Market Snapshot with Dan French from Nova Home Loans with the latest information about home loans in Las Vegas. Now, here's Dan French.
Welcome to the Market Snapshot. This is Dan French from Nova Home Loans, and I just wanted to touch base here. I am your go-to loan expert here in Las Vegas, and I'm here today with my friend Chuck Crusoe from Simply Vegas. What's going on today, Chuck?
Everything's going good. How's everything going with you?
I'm doing wonderful today. How about you, Doug? How's things going, Doug?
It's going great, man. I'm just already doing our first call.
All right, good.
Already?
We also have a special guest today. His name is Peter Swan. He's from Country Financial. And Peter, how's your Sunday going?
It's going great, Dan. Thank you.
All right. So I just wanted to touch base. And as always, it's a pleasure and a privilege to educate the Las Vegas community. Isn't that right, Chuck?
That's why we're here 7 days a week. This is all we do, nonstop. We only take breaks.
That's right. News and events. What's going on today, Chuck? You got any news and events for me?
What do you think about that fight last night?
I don't know about that fight, man.
Sounds like you were disappointed.
I was disappointed.
You did call the fight, though.
I called it 3 weeks ago.
You're absolutely right.
Not just myself, though. I think other people called in and, listening to other sports radio talk. I mean, everybody pretty much said Mayweather, going to decision. So, I don't know. I was kind of disappointed. I thought Pacquiao was going to put up a little bit more of a good fight, but it seemed like Mayweather was kind of running, didn't it?
It seemed like it was almost like an expedition or something like that, wasn't it?
Yeah. And then he gets on there and Mayweather was talking. He's like, I want to stop boxing, very soon. I don't have my heart in it. And I don't know if that was the best timing for that. I think everybody out there that paid money was like, what does that mean? You're just in it for the money?
Yeah, of course. You got a $100 million check last night.
The money team. I guess that's why, right? Also, we also want to talk about Tropicana. They it was just recently sold for $360 million.
Man, that's a lot of money.
Did you know about this, Chuck?
Yeah, I did. It was actually built about 58 years ago. And here's a couple fun facts about it. Did you know their theme was actually a South Miami theme? The rooms, they have 1,460 rooms, gambling space over 50,000 square feet. One of the shows that they have there, it's called the Laugh Factor.
Uh-huh.
Have you ever been there?
No,
Okay.
I've never been there.
They actually renovated this hotel 3 times, in 1979, in also 1986, and also in 2011.
Yeah.
Now, the cool thing about this is that they did a lot of films at this hotel. You got Viva Las Vegas with Elvis Presley, James Bond, Diamonds Are Forever, The Godfather 1 and 2, and Charlie's Angel.
Wow. I don't think I've been in the Tropicana for 10 years. So
Well, we got to go.
hopefully they changed the theme up a little bit in there now. I don't know. It just seemed like it was, every time I went in there, it's not like it's a bad casino, but I just felt like it was older. I don't know.
I think
not a lot going on.
I think it's probably because of the structure. They got to change
Maybe.
the structure. That's what I'm thinking.
And
But
plus-
the inside is actually very nice. I like it.
But you also got to look at the Strip. I mean, we go down there, and they're building constantly. They're constantly, rehabilitating and renovating hotels. And I think some of those hotels, including the Tropicana, that's one of the hotels that needs to be, redone, I think. It needs to be a little bit more modern. It needs to have a little bit more attraction going in there.
Well, let the owner know that.
Well, we got a new owner, just like we said. So Penn National Gaming spent years for shopping for a Vegas Strip property, and they finally found it. This is the company that bought it out. And so, I think it's going to be great.
Yeah.
I think there's going to be a lot of things that's going to be going on as far as changes. So, also, we have a caller on line 1. I just want to take this caller real quick. They've been sitting here for a while. Hi, this is Dan with the Market Snapshot. How can I help you?
Hey, yeah, how you doing? My name's Doug. I finished a short sale last month.
Okay.
And do you have any ideas or input on how I could alleviate the deficiency or tackle the deficiency?
I think they have put out the Debt Forgiveness Relief Act to the end of this year.
Well, when you did the short sale, they should have already done that within the negotiations between you and the bank. And what happens is the bank will issue out a letter of approval, and based upon those terms and conditions, you want to make sure that deficiency is waived, and you have to have that language in there.
Did that answer your question, Doug?
Yes, it did. I appreciate it, and I'll check back on my paperwork.
Doug, do us a favor. Call us outside studio at 781-6682. That's 781-NOVA. And we'd like to sit down and schedule a free consultation. Chuck can sit down and tell you what your options are, and then I can give you options for repurchasing if that's what you want to do.
Awesome. Thank you.
All right, Doug, you have a good day, okay?
You bet. Bye.
The Riviera, check this out. The Riviera was actually built in 1955, and they're actually closing on May 4th. And actually, the convention and visitor authorities actually had purchased it, and they're actually expanding the convention center.
Really?
Yeah, so we need to go take a look at that because that's history going in makes.
Yeah, I'm going to be down there. I think I'll take a look at that. Also, we had the 141st Kentucky Derby that went on yesterday. Tons of betting went on yesterday. Tons of betting. You had the fight. You had the Kentucky Derby. Playoff basketball. I mean, what else? I'll tell you right now, the strip was just going off.
It was. Hey, you know what's crazy is who's that football player was actually at the Kentucky Derby and he flew all the way to that fight. That was crazy.
What was his name? It was the quarterback for
the Patriots.
Yeah, the
What's
Patriots.
His name, Peter?
Peter, do you know his name?
Tom Brady.
There you go, Tom Brady. We just had to get Peter in there. So yeah, Tom Brady. Yeah, he's got a private jet. Come on, man.
Yeah, no, that's
who
real
goes
money.
and then 3 hours later he's like looked like he was like about to fall asleep at the fight. And he's like, yeah, I just had a long day of betting, and he's there. So I mean, I think that's crazy.
And that's how we do loans in real estate too.
Private jets.
Private jet.
So also I wanted to talk about. We also have a new thing that came out from the FDIC, which is the strongest. There was a strong virus, a bank virus, that they're really trying to assure that it does not affect people and their banks with banking deposits. So what they did is it's the FDIC is the Federal Deposit Insurance Corporation. They're seeking to comment on whether certain insured depository institutions that have a large number of deposit accounts, such as more than 1 or 2 million accounts, should be required to undertake actions to ensure that if one of these banks would fail, depositors would have the access to their FDIC-insured funds in a timely manner, basically to protect themselves against having this virus come in and take some of getting access to their accounts.
And I believe as soon as you walk into the bank, there's a label right there, and it says it covers up to $250,000. But my question to you is, what happens if you have more than $250,000?
I don't know. It looks like the bank's got some problems there. So, but here's the deal. I mean, I guess this is a huge issue. You got a virus coming in. You got something that could affect your banking deposits. And I think it's good because they're taking the initiative to maybe, minimize the problems that could come out of this. And I think most banks have seen this in the past. Remember when they were, hacking into people and their credit cards and things like that? They're just trying to prevent the same things occurring in the future. So
should I take out my $30? Just
you told me you had 35. Did you go for a McDonald's Big Mac today?
Yeah.
So let's do this. Let's go ahead and go over the market rundown. And I wanted to talk to you today about this. Chuckits, you ready for the market rundown?
I'm always ready with the market rundown.
Housing market statistics. We got interest rates trending. We got our good friend today, Peter Swan from Country Financial. We're going to talk about the leverage of financing. Also want to tell you about new homes on the rise. And we're always going to finish every show off now with the Lender versus Realtor face-off.
And what is that?
Well, I'm going to tell a little bit when we get into the segment, but I will tell why we do it, and I'm going to tell what the outcome of some of these questions and things that we've experienced ourselves. If you have any questions regarding the show, you can call into studio 257-5396. Again, our consultations are free. Also, if you guys want to go and look at we can tweet me at 781NOVA, and also you can view my website at danfrenchnova.com. And Chuck, we also put together a series of educational videos called Take Notes, and we also are putting together a new website. Can you tell me a little bit about that, Chuck?
Yes, the website is the Las Vegas Market Snapshots. Basically, it has Dan's complete information, it has my complete information. Also, if you want to apply for a loan and all the programs and information is on that website. Also, all our past videos will also be on there too as well.
What do you mean by complete information?
As far as,
here's the deal, man.
Yeah.
I only want to give out certain things, so hopefully they're not going to be checking my background and things. You know what I mean?
Oh, that's already on there.
Oh, no. I'm just playing. Everything's cleared.
It is.
So anyways, I want to go ahead and touch base. Chuck, tell me what's going on in the housing market. Also, real quick, guys, I want to tell you that we're going to be giving a free gift card for P.F. Chang's for lunch for 2. Anybody that calls into the show, we've already had one caller. Anybody that calls into the show, again, it's 257-5396. Real quick, Chuck, before we go into the housing statistics, I want to take this caller. Steve, are you on line 1?
Yes, sir. Hi, how are you?
Good, Steve. How can I help you today at the Market Snapshot? Thanks for calling in.
Quick question. I don't know if it's specifically for you guys. A friend of mine bought some land in Arizona, 2 acres, little just outside of the lake, a Meadview recreation area. When his wife passed, she did not make out a will. He's been paying the property taxes on the property for 20 years. So now he wants to switch the deed over to a friend, to just gift the property to a friend. Will he have to go through the whole probate process and all that, or is there a shortcut way to do that?
Well, I think you have to get an attorney involved with that. That's something that we really don't do here, correct? You don't deal with anything.
Yeah, something like that. I want to give you advice. Plus, because that's out in Arizona, that's a little bit different.
Do you know in Arizona? Well, maybe an attorney based in that area or something.
You know, I got my company headquarters is out there. I can always call somebody in Arizona.
That would be great.
Yeah. We have.
Can I get your number off the air? Or can you give me your number?
Yeah, it's 781-6682. You can call us outside studio, and I can give you that information. We'll call somebody in Tucson. That's where my headquarters is at for Nova Home Loans, and we'll get you going on that.
That would be great. Maybe he can hook up with this guy in Arizona there. Oh, do I have a chance to win a P.F. Chang's gift certificate too?
You do have a chance. You're in the runnings.
Oh, good. Thank you, sir.
We're gonna have Doug pull it out of a hat at the end of the show.
All right, great. Thank you.
All right, Steve. Thank you for calling in.
All right, good show. Thank you.
Okay, bye-bye.
All right, let's talk about the housing inventory. Let's start off with the duplex. Remember, guys, each week we're always going to do a different sector within the marketplace and follow up with the overall inventory. Duplexes for this week, we actually seen a 36% decrease in inventory since January. The median list price now is about $105,000. The average sold throughout the whole Las Vegas Valley is about $85,000, which comes out to about $42,500 per door. The average days on the market, if the property is actually priced correctly, is about 109 days. Now, here's the thing. The duplex inventory that's currently listed on the MLS, which is the multiple listing service, is only 0.003%. Okay,
wow.
90% are actually private sales. 10% are actually short sales.
Okay.
The average rental rates in today's market is about $450, based upon the condition and also the location of the property. Now, I think the reason why this sector has really moved slow is because during 2010 and 2012, what happened was when we're going through this whole recession, you know, investors would actually buy these properties at the auction and they would pay cash.
Right.
But they were buying it anywhere from $30,000 to $40,000, you know, on a duplex to a fourplex.
Wow.
So here's the thing. They bought it all up.
Okay.
Now the market is up.
Okay.
And they're putting it back on the market at full asking price, around, you know, $50,000 per door, which is, it's not worth it. So people are not buying, because when an investor buys on something like this, they're buying based upon the financials of what type of return are they going to make on their dollar. So what's happening is these investors that bought during that time, what they're doing is they're holding off. They don't care if they get their money or not, because they're making a hell of a return. Because remember, when they bought it for $30,000, $40,000, it doesn't matter if they don't sell it for $150,000. But Dan, let me ask you this.
What?
Can you finance on a multi-unit? And also, is it easier to finance than a primary residence?
It's a little bit harder to finance, but yes, we can do up to fourplex or up to 4 units.
Okay.
And yeah, I mean, they have different guidelines, and I'm not going to go over it on the show, but yes, we can do it.
Okay.
They do run a little bit layer of a risk, especially if you're like trying to, you know, occupy one of the units and then rent the other 3 out, which a lot of people do.
Okay. Now, the overall inventory has declined by 4% since last week, but a 34% increase in sales. What that says is that we actually sold a lot of homes last week.
Yeah, we sold a lot.
Now, there are a total of 9,535 properties currently listed on the multiple listing service, but this does not include new homes or for sale by owners. Remember, Cadence, 13,000 homes. Inspirata, additional 10,000 homes.
Wow.
And also you got other developments around the whole Las Vegas Valley. So total, I'm going to say roughly maybe about 30,000 homes currently available in today's market.
All right.
Now, the overall market 85% are actually private sales, 11% are actually short sales, 4% are actually bank-owned properties. These numbers have not changed since the beginning of the year. I believe that the market is completely stagnant, and the reason why is because the sellers are still living in the price point about 3 years ago.
Exactly.
Okay, so that's why the market is stagnant. But what I'm starting to see, and I know that we're going to go into this segment, is new homes are on the rise.
Yes,
and I think that's part of the problem here is because if you're going to pay over the top dollar for a home that a seller wants, let's go buy a new home.
No, I agree with you.
So let me ask you this: what's going on with the interest rate trending?
Guess what? Interest rates finished worse again.
Oh, I'm getting scared. I got to buy something.
If you're out there, you need to listen to this, okay? Mortgage bonds finished the week lower, which pushed rates slightly higher again. As I said, every week we're losing pricing on rates. You know, we've lost the full now 0.75 of a point since beginning of February. Rates were neutral Monday morning, but pushed higher midweek despite rate-friendly data. Consumer confidence came in at 95.2 versus the expected 102.2. You got to look at the Fed kept rates unchanged and indicated economic risks were balanced. Mixed data Thursday did little to stem the earlier losses that we had in the beginning of the week. Weekly jobless claims, which was supposed to come in at 290, came in at 262. Now that had a huge effect on rates. Now what this indicates, it's not the only indication, but you know, when you look at in theory, the weekly employment data reflects the health of the job market really, and it really indicates one of the key elements to where the economy's headed and where rates are going to go. So if you look at it overall, mortgage interest rates finished the week worse by about 0.25 of a point. So again, if you're out there, you have not looked at the idea of refinancing your home, you have not looked at the idea of if you're purchasing a home, if you want to pull the trigger, now's the time to do it. I think rates are going to go up even more. You're probably looking at anywhere from 5 to 5.5 by the end of the year. And anybody that's out there that's on the fence right now, you really need to call us outside studio, 781-6682. Find out what we can do to help you, see if we can save you some money. I got a caller, Joe, on line one.
Yeah, good afternoon.
Good afternoon, Joe. Thanks for calling into the Market Snapshot. How can I help you?
Yes, are there still repo townhouses available?
Repo townhouses?
Yeah, I mean, you still can go ahead and buy properties down at the auction, but the problem that I'm running into, and I used to purchase a lot of properties down at the auction, the spread is no longer there, and what's happening is investors are competing against each other, and the margin is getting smaller and smaller. Okay, the best way to actually get a deal is set up an appointment with me and Dan with a consultation, and I'll show you my tricks and strategies actually how to buy properties off the market.
And if you're financing a townhome, I don't know if this is what you're looking to do, but if you want to, there's no difference in a townhome and a single-family residence, you know, and that's a great thing to have in your hip pocket because, you know, when you're financing or you're looking for financing, there's no real big red flags when it comes to townhomes. Now, keep in mind, when you're buying at an auction, you do have to pay all cash right there and then.
Right. I have a house and I want to get rid of it.
Okay. Did you want to give us a call outside studio, 781-6682? You can sit down and we can talk about how Chuck can maybe give you some options on what he can. Maybe are you thinking about, are you upside down or?
No, I am not. It's paid for.
It's paid for. Okay.
Yeah.
Maybe we can talk about getting out of that home and buying another one. So
get out of the zip code as well.
What zip code are you in?
21.
Where are you trying to get to?
To heaven. I don't know.
Well, I'll tell you this much. Hey, Joe, thanks for calling into the show. We'll talk to you outside studio, and Doug is going to take your information. So hold on, okay?
All right, thank you.
All right, I want to thank Joe for calling in real quick. So we're going to talk about our money savings of the week, and we're going to talk about that right now, the money savings of the week, because I'll tell you right now, we saved a ton of money because I locked in somebody's interest rate last week at the beginning of the week and did not let rates determine, by Friday what, them losing money on their refinance. So I'm going to tell you right now, this was a $400,000 loan that I locked in on Monday, and we're saving him right now about $110. Okay, now if you times that by 5 years, that's about $6,600 in 5 years of savings,
and that's a lot of money.
Yeah, so I'm going to tell you right now, I'm constantly looking at rates. When they change, I obviously call my client and I tell them, hey, these rates are going to go up. They've been going up. The trend is it's going up. You need to lock in your rate now, especially if you're looking to refinance. If you come in on a contract, we're obviously looking at them too, but it's really determined when you get the contract. So if you're refinancing with me, I'm constantly looking to see how I can maximize the savings on your dollar. So I also want to talk about, let's go ahead and introduce our guest on the show. His name is Peter Swan from Country Financial. And Peter, can you tell me a little bit about yourself?
Yeah, definitely, Dan. So I work with Country Financial here. I've been working for them for about a year now. Going on. We have about 7 locations here in town. Work out of the Green Valley location.
Okay.
And that's just a little bit about what I do.
Perfect. Now, Peter, I want to say thank you for coming onto the show. We're going to educate them a little bit more on some of the things that you do, what Country Financial can offer. Let me ask that question. What does Country Financial offer here?
Yeah, so the Country Financial Group, we serve about 1 million households and businesses throughout the United States. We offer a full range of financial products and services, anywhere from auto, home, business, farm, and life insurance, all the way to retirement planning services, investment management, and also annuities.
Perfect. Sounds like you got a ton of options. So like when you look at retirement accounts, all right, what do you offer on retirement accounts? What's involved?
Well, Country offers a variety of products and services to help both individuals and also businesses plan for retirement.
Okay.
One of our local representatives and our planning professionals can give you a no-cost analysis of your current situation and recommendations on what you can do to help make your retirement goals happen.
Okay.
So let me ask you this. With the retirement account, let's say we create up a retirement account, we start having some money in this account 5 years down the line. Can we actually pull that money out to buy a property?
So in regards to you've accumulated money into the retirement account and you're asking if you can pull money out for like a distribution in essence, right?
Yes, that's correct.
There are qualified events when it comes to retirement, and one of them is to actually purchase a home. So you can do that. It's just important to remember that there are qualified events, and you need to keep that in mind. So,
okay.
Yeah.
All right. Perfect. So you have different investments, right? How will somebody get started if they wanted to look for doing this and maybe getting started on investments? How would somebody get involved with that with you?
Well, some of us out there don't have a problem taking big risks, whereas other people tend to side on the side of caution.
Okay.
Before you decide to invest, for example, you should consider the following. The first one would be time. Investing is something you do for the long term, and risk may be partly reduced by the mere passage of time. Past performance doesn't guarantee future results. History shows that the impact of short-term market losses diminish over longer investment timeframes.
Okay.
In fact, collectively, the stock market has historically recovered from losses. And the second would be to look at asset allocation. So not only should you look at time, but also look at your assets and how they're being allocated. The goal of this strategy is to help balance risk and reward by dividing your money between asset classes. So if interest rates rise, which we've been talking about, for example, today,
right.
and cause the value of your bond allocation to fall, there may be an increase in the stock portion of your portfolio. Your particular mix should take into account, just to go over that really quick, how comfortable you are with risk, which we just spoke about, your goals, how long before you'll need the money, and it can be a useful tool to help manage risk, but to ensure profit or guarantee against loss, always keep these things in mind.
Okay. All right. So you look at health insurance. How do you get started on that, and how does that work? Because I know you said health insurance, right?
Yeah, health insurance is very important, especially with the passage of the Affordable Care Act, which became law in 2010.
What is that, real quick?
So, for example, how does it work?
Yeah, what is that? I don't know. I've never...
So the Affordable Care Act, again, is something that everybody has to be covered by now, meaning health insurance, or you pay a penalty, right?
Okay.
So what we look at are online marketplaces, also known as exchanges.
Okay.
They're available to U.S. citizens and legal immigrants who aren't in prison.
We're not going to throw the percentages out on that.
No. But most of these online marketplaces are set up by individual states, although the federal government steps in if a state opts not to set them up.
Right.
And they have about 4 levels of coverage in regards to those, which are bronze, silver, gold, or platinum.
Perfect.
So that's just a little bit about that.
All right. So if you look around, let's jump to long-term care insurance. All right, let's talk about that. What is long-term care insurance, and how is that involved with you?
Yeah, definitely. So long-term care insurance, for example, as you get older, there's a good chance you'll require some type of it, meaning long-term care services. It provides assistance for you when you can no longer take care of yourself due to an accident, disability, or chronic illness.
Right.
Long-term care services are not typically covered by health insurance or Medicare and can include the following: in-home care, nursing home care, assisted living facility care, adult daycare, Alzheimer's unit care, and hospice care.
That's a good one.
Yeah, that is a good one.
Something to keep in mind really quick when it comes to long-term care, according to the National Clearinghouse for Long-Term Care Information, about 66% of the U.S. population will need long-term care at some point during their life.
Wow.
That's interesting.
Yeah, that's good. That's good that you offer that. So if you look at it, how many of our listeners that are young out there, are saying, well, why do I need this? Why is it that I need to get involved with this, and why do I need to do it right now?
Yeah, definitely. So, for those listeners out there, maybe the older demographic, maybe 45 and plus, maybe it's more important to them, but it's also important if you are young. Long-term care, the ability to afford it goes up over time. So, for example, it's always better to start sooner than later.
Okay.
If you're between the ages of 18 and 84, you may be eligible for a tax-qualified long-term care insurance policy. Country offers 3 plans with different levels of protection. Each is flexible and can be tailored to meet your specific needs, and they can be paid up in as little as 10 years or even by age 65 when most people are hoping to retire.
Yeah, so that means there's options. We always talk about, looking at a wide array of options for people out there, and, every age group can benefit from this, right?
Yeah, definitely. Every age group can benefit from this, and that's why I feel it's important to look at it.
So how expensive is this? Like if somebody wants to end up, getting long-term insurance care, or long-term care, how do you get involved, and what's the expense that's involved with it?
Yeah, the expenses are a very interesting factor here. But, so for example, according to a survey by one of the most comprehensive and respected surveys in the industry, going back to 2010, for example, the average annual cost for a semi-private room in a nursing home is $67,525. And when we look at private rooms, it goes up to $75,000, $190. So these costs translate to an average of $185 per day for semi-private and $206 per day for a private room. And for example, a home health aide who visits 3 times a week can cost more than $18,000 per year. And like I said, all these numbers are continuing to rise.
All right, when we come back, we're going to talk a little bit more with Peter Swan. It's Dan French with the Market Snapshot. Welcome back to the Market Snapshot. This is Dan French from Nova Home Loans, and I wanted to touch base. Thanks again. I'm here with Chuck Crusoe from Simply Vegas.
Hola.
What's going on, Chuck? And I also hear Peter Swan from Country Financial. What's going on over there, Peter?
Hey, thank you so much, Dan, for having me on.
I appreciate you coming on, man. And here's the thing. If you guys have any questions regarding the show, you can call in studio today at 702-257-5396. Again, our consultations are free. You can always get a free consultation at 781-6682. That's 781-NOVA. You can always tweet me at 781-NOVA and view my website at danfrenchnova.com. And Chuck, we also put together a series of educational videos. Real quick, what is that? I want to throw this out to our audience real quick.
Take Notes is a library of educational videos of real estate professionals in the industry and was created for the first-time home buyers, investors, and sellers. Visit simplyvegashomes.com, navigation bar on the right-hand side. Click Take Notes.
We're also putting together a website, and this website will have everything regarding the show. So if you miss anything on our previous shows or you want any further information, you can always go there. We're going to have this up very shortly. Just want to let you guys know that. Also, want to go right back into talking with Peter Swan. And I want to talk to him about, going back into what he offers. He works at Country Financial, and I have another question here for him. If you have any long-term care, Peter, long-term care insurance, are there any types of insurance or government programs that can help some of the costs that are out there?
Yeah, Dan. So, many people assume that Medicare, supplemental policies, or standard health insurance policies will cover long-term medical expenses. So they tend not to plan financially for their long-term care needs. So keep in mind, Dan, that there are riders available that can be added to life insurance contracts and annuity contracts. That's why it's important, again, to meet with the financial representative to figure out what option works best for each individual situation.
Okay. All right. We got a caller on line 1. We're going to take this caller real quick, Peter.
Okay.
Carolyn, this is Dan French, Market Snapshot. Thanks for calling in. How can I help you?
Hi, I have a question. I have money in a 401k. Am I able to use that as a down payment on a home?
Yes. Do you have any restrictions on pulling the money out through your 401k?
I don't believe so. I would have to call them to check.
Yeah, I mean, some of them have like where you can take only up to
Like
60%.
60%,
Yeah, 60% off of the retirement account. So my suggestion is, yes, I can give you a loan if that's what you're looking for. You can reach me outside studio 781-6682. I'll have to look at your overall picture, Carolyn, obviously. I mean, but using that for a down payment, yes, we can definitely use that. So hopefully you can give us a call outside studio.
Something that you might also want to take a look at when you look at the terms, because once you pull out that 60%, you got to actually pay yourself, and you got to see what that interest rate is, and is it even worth it?
Right.
But keep in mind, if you're getting an FHA loan, I know that there's a couple programs out there where you can literally get into a property with pennies on the dollar because you can get that government program. I can ask for closing costs because you are calling the show. We pay for the appraisal, we pay for the home inspections. It's literally pennies on the dollar. So as long as you do the numbers, and if it makes sense, you might want to go that route, or you might want to look into with Dan.
Bottom line is, Carolyn, we have options. So give us a call outside studio, okay? 781-6682. And I just want to say thank you for calling into the show. You're going to be in the running for the P.F. Chang's Lunch for Two.
Nice.
Okay, sounds good. Have a good day.
You as well. Thanks, Carolyn, for calling in.
Thank you. Bye-bye.
All right, Peter, we got one last question. I want to ask you, because this is something I wanted to know. Is there anything we have not covered today that I've asked you questions? I think Chuck's asked you some questions. Is there anything that maybe some other opportunities or benefits that they can get from you?
No, Dan, I think we've covered a lot today, actually, in regards to long-term care, health insurance, as well as what we offer here at Country Financial. I'd simply close by saying this. Just take a couple of hours annually to sit down and review your financial plan.
Okay.
I feel that's very important to see if you have any shortfalls and anything that you can address in the long term or the short term.
Okay.
Just remember, Dan, that knowledge is power.
It is.
I feel that for our listeners out there, that these topics are extremely important to building a solid financial plan. So,
all right.
So let me ask you this: how often should you, take a look at your portfolio and everything like that?
Well, from my opinion, I would say it's important to look at it, every quarter, semi-annually, or even annually. It comes down to the investor, what they feel most comfortable with.
Right.
When do they want to sit down, and what do they want to look at? But again, it is important to look at that because we want to make sure that there hasn't been anything that could have, major policy lapse, or there's no shortfalls, so we can build that solid financial plan.
Okay.
Perfect. Well, Peter, I want to say, how can audience get a hold of you if they need to?
Yeah, so the best way to get a hold of me is via email, for example, at peter.swan@countryfinancial.com.
Okay.
Via the internet here.
Okay.
Just google.com, Peter Swan, Country Financial. My picture will pop up.
Also, you can get us outside studio, like we've said. If you want to get a hold of Peter, call us outside studio as well, 781-6682. We'll definitely take some information down from you, and then we'll pass it over to Peter, and you guys can set up a consultation. Peter, thank you for coming on to the show, and Chuck and I want to say thank you, and we appreciate it, and hopefully you'll be back soon down the road.
Great. Thank you so much, Dan, for having me on.
All right, Peter Swan, guys. Also, we're going to talk about, we're going to go right into the leverage of financing and the difference between paying cash and financing homes. And Chuck, you want to talk about this. I think the problem with most middle-class investors, they think that there's really limited options for finding homes and investment homes. The alternate solution to that is they pay cash in most cases, but they don't have a high amount of cash, so they don't know how to leverage that money. And what I'm looking at is, if you look at the overall picture, and if you have a financing institution or a lender that has the ability to provide different financing options, my company will allow up to 10 finance properties. I think when you look at that and you exercise, well, what is the options? Can I take the money that I have and leverage it over multiple properties? I think you really got to take a look at that. Chuck, what do you have for us as far as that goes today?
You know what? You're absolutely right, because here's the thing. I actually had an investor call me. I think I was actually yesterday or the day before. And, he was like, hey, I want to get into the game as far as investing. And I asked him, are you looking to invest in long-term or actually short-term investing? And basically he was telling me that, hey, I want to, invest in long-term.
Right.
But now here's the thing. There's two differences with a short-term and long-term. Typically on the short-term, that tells me that you are a cash buyer, that you're just looking to buy properties and flip properties, okay? Now for the long-term, it's more of a passive income strategy.
Right.
And it's more of a buy and hold, okay?
Okay.
Now, the whole idea of passive income properties, what you do is, you're looking for properties that is going to net you a higher rate of return. And that's an ROI, which is, rate of return.
Right.
Now, I'm going to actually break it down, and I'm going to show you the power of leverage.
Break it down for us, Chuck.
Just to simplify everything, let's just say you have $100,000 cash in the bank.
Okay.
You purchase a property for $100,000, every month you get
Have
rent.
you been looking at my bank account?
Oh, I thought you had more than that.
No.
Okay. So let's say every month you're getting a rent for $1,000 every single month. So that tells you annually your rate of return is 12%. Okay. But I'm going to show you the power of leverage. Okay. Now let's say if we did financing through you, we put down 20% on $100,000, and now your loan balance is $80,000. Okay. Based upon a 30-year amortized, okay, at a 4% interest rate, your monthly payment is around $381.94. I'm not a lender. I'm just throwing this number out here just for an example. Okay?
Right.
I want to clarify that.
Okay.
Okay. And let's just say you're still getting a rent of $1,000 a month. Okay.
Perfect.
Now, you take $618
Right.
and 6 cents times 12. That's $7,416.72 cash flow that you're making every year.
Right.
Now, if you take that and you actually divide that by the 20% that you put down, which is the $20,000, your return on investment is 37%.
Wow.
Now that's
37%.
37%. Now that's the power of leverage.
And you know what I notice about you, Chuck? You're constantly in the market as far as where you can find those big returns on. And you're constantly looking at different zip codes, looking at different properties, how you can take a look at things, especially for your clients that are investors, and trying to look at those properties and say, you know what, that right there can be fixed up. And you know what, your return on this is huge. Sometimes you look at them and you say, you know what, the return's not there.
You know what? You're absolutely right. It's case-by-case basis. And what it really comes down to is, number one, is the location, the appreciation factor in the near future.
Okay.
Also, what are the rental rates, too, as well? And what are the demands around that area? So everything really does play a factor. But these are just numbers I'm throwing out here just to show you the power of leverage. There's more to it than that. Okay?
Yeah, and I think most people, too, and we'll talk about this a little bit, with the financing options, they don't know that they can finance up to 10 properties. And I think some people are like, well, I've already got 3 or 4. Like I said, people that have money, they don't need financing options. They don't need the leverage. But I think the upper middle class person, the person that has, assets and money in the bank, maybe they're a privately held business owner or something like that, where they're making, they have $300,000-$400,000 just sitting in the bank, and they're like, you know what, I want to make investments because I want to leverage my money. Those are the people we're looking at. Those are the people that need those options, because people, like you said, hedge funds and other people, they don't need leveraging financing. They just don't need it. They're not going to come in and be like, we need to finance 10 properties.
Yeah.
So,
and it's like right now, I mean, ask yourself, what is your bank giving you right now with that money being in the savings?
Nothing.
Exactly.
Nothing. So why don't you take your money and use your money and diversify your money, and like you said, leverage it.
Yeah.
Get financing if you really want to look at the market. Chuck is perfect on that. He's somebody that can give you the information and education that you need. And, you can become, multiple homeowner.
And you know what's great about this is that if you went with the financing, remember, now you still have $80,000 cash in the bank.
Right.
And remember, you can get up to 10 properties with Dan. So that tells me now we can go buy 4 more properties. Now imagine holding on 5 properties that's netting you a 37% return on each property.
Right. And so, Chuck, anything else we got going on with the leverage of money?
Nope.
This is it. All right. Well, I think when you look at it from a financing standpoint, there is a little bit more risk that needs to come in, that does come into this. You have to have a little bit higher credit score. You definitely want to put all of the information from those properties on your tax returns. Okay, I have some people that do have multiple properties and they do not put them on their tax returns. And guess what? I can't use that rent income. And that's a huge part of it.
It is.
Now, if you're looking at yourself and saying, hey, I want to buy a property that's an investment, and you don't have it as an investment already on your tax returns, well, I can use a lease agreement to help you offset some of that in most cases. But if you're already an owner, a homeowner, and then you have other properties and you're not putting it on your tax returns, I have to count that debt against you. And guess what? That's when your debt ratio starts to increase, and the amount of homes that you can purchase start to go down.
You know what? I noticed a lot of new investors make that mistake because at the end of the year, they're just trying to save as much money as they can.
And realize this. I mean, you have to show taxes, insurance, even if they're paid outright. You're still being hit for that debt, okay? But if you have put them on your tax returns, you do show that you have, multiple properties that you're taking in consideration. And if you're getting a positive result from it, now obviously if you're taking a negative result, I have to hit you for the debt. But if you're taking a positive result, in some cases, it could help you even qualify for the loan.
I mean, real estate is just like a game. I mean, you really got to get educated. You got to understand the game. And once
Exactly.
you understand the game, you can play it to win.
That's exactly right. So let's go right into our next segment, Chuck. We talked a little bit about new home sales, which also picked up in March. Okay, the problem is the problem I think with buying a new home is that buying a new home costs more money to have, to get it for one, and it's sometimes exactly what the client's looking for. But how much are you paying to get that home that you want?
It's not the overall price. It's really the base price. I mean, the base price is a fair deal, but it's all those
The
extra
additives.
options.
Exactly. We
That's where
talked
it
about
kills
it.
you.
Yeah, I mean, you want to get, I don't know, French doors that cost you $5,000. You know
And
what
you
I mean?
can go buy them at like Lowe's or
Yeah.
Home Depot for like $800.
I mean, I could have somebody come in your house tomorrow and put those in,
Yeah.
But the solution, the alternative solution is they give incentives, just like we talked about, and closing cost incentives, which they say, hey, we're going to give you $8,000. And you know what? Listen, if you're out there and you want to buy a new house, there's nothing wrong with it, but realize you're probably not looking at the idea of maximizing your dollar. A lot of times you're going in because of the incentives and because of things that you're getting involved, it's already negative equity.
Yes.
And especially when a market that's stagnant, you want to think about that because how much appreciation is that thing going to appreciate?
You're absolutely right. I'm currently working with a doctor right now, and we've been looking at used homes, but they want so much money for it. We started looking at new homes, and at the end of the day, he asked me, should I buy a new home or a used home?
Right.
I asked him,
Yeah.
you're going to retire here, right? Are you moving after this? He said,
Exactly.
hey, I'm not moving. Okay, then you probably want to look at a new home.
Yeah, it might make sense at that point, And but it's good for a majority of people, if you're looking at it from a business standpoint, which I hope you are.
And
what
you
is the-
should be.
Yeah, what is the return on my dollar? What am I getting back for the money that I'm putting into this? Am I building equity?
Yes.
And do I have value in my home? And that's a consideration that you really have to look at. You also got to look at the idea that, the truth about new homes is you'll be paying more in the long run because a lot of times your loan amount is increased. And so you're going to be paying a little bit more on your payment as well because those incentives and things that's outed, you have to add that to the top of what you're trying to finance for.
Yes.
So you got to look at that. Now, let me tell you guys some numbers here about what has gone on in March. Okay, builders sold 543 new homes in Southern Nevada in March, bringing the first quarter to 1,378 deals. This is up 8% from 2014 if you look back a year. That's huge. The median price sale home for a new home is $312,204, which is up 9% from last year.
And that's probably the base price.
And we talked about it. I mean, for a new home, that's big because the average median price is like $205. And if you look at the average median price home for a home that's sold that's new, $312,000, that's a huge increase.
And you know what? There's a client that right now that I'm working with, and we may be selling her home. She's $40,000 below. She bought in a location where, it hasn't really appreciated, and she's currently about $50,000, under equity because she bought a new home. But the problem is that now she wants to sell. There's other new developments within the area, and she just wants to get out. But she's going to lose $40,000.
Listen, it's good that we're building because what that shows is the economy is stabilizing, okay? And there's nothing wrong with that. You're going to have options. That means people are going to start working. But at the same time, you also, like we said, you got to look at the value of it. You got to look at what your goals are. And that's something we need to sit down. If you guys want to talk about, new home purchasing, and you want to sit down with us for a free consultation and see if it works for you, you can always reach us outside studio at 781-6682. Also, I wanted to tell you that in a lot of cases, they give those closing costs. You want to take advantage of them, but realize that I, as a company, Nova Home Loans, can also give you closing cost incentives. All right. I'm not going to guarantee those closing costs, but I can do it off of the rate. A lot of times I have a rebate back to your closing costs, especially on an FHA or VA loan. And it does offset a lot of those costs that you see. So a lot of times you got to look at the overall picture. Is the long-term investment on a new home versus a home that's out there that's already been out there being not sold but already put out on the market? Is there a huge savings? And a lot of times there is when you buy a home that's not new.
Also, I do want to mention in today's market, if you're a buyer out there looking,
right,
buyers are actually getting closing costs. We can actually negotiate that.
That's what I'm telling you.
That's big.
Yeah, and we're going to talk about that as well. So what we're going to do is we're going to go right into the lender versus realtor face-off, and I want to go over this with you, Chuck. The reason why we do this, everybody out there listening, this is to help people in the market looking to get answers on financing real estate. And I'm going to tell you something. These are questions that I get, and Chuck gets from our previous week, and we throw them on the show just so if the client's listening, maybe we can reassure that. And the second thing is if you're out there and maybe you have the same question happen to you, you'll know how to answer that and how to handle it. So we're going to go right into the lender versus realtor face-off. You ready for this, Chuck? Let's get it on.
I'm always ready. You want to start it off?
I want you to start it off today.
Okay. What is the steps and the procedures once you receive a fully executed contract?
Well, the steps that I take is when somebody comes in and they see that there's a contract, I always want to review everything on the file. I really take about 30 to 45 minutes, make sure that there's everything on that file correct. You got to look at the taxes. You got to look at the HOA payment. You want to look at what rates are doing. You want to make sure that the debt ratio's there. Nothing's changed on that. And then, when you get it all structured, I immediately contact the client. I tell them, hey, what do I need? This is the things that I need from you. I needed updated bank statements, updated pay stubs, all these things that's important to assure that we get this thing in very quickly because you're now on the clock.
Yes.
And when you need that 30 days to get closed, you need to get acted right then. You need to start right there and you need to get on it. So I think for me, I'm always being proactive. I'm always somebody that's trying to educate my client, let them know that there's what their goals are, and then get them to closing. My question to you is, how do you negotiate repairs? This came back last week. Mm-hmm. How do you negotiate repairs into the property, and will the seller accept the conditions? Do you know anything about that?
Well, it really depends. Here's the thing. When you're negotiating on a contract, there's a part within the contract that says, will the seller contribute a certain dollar amount? Keep in mind, if your agent puts $0 amount, you are waiving that. So what I do is if you read the fine lines, I always put at least a minimum of $25. So that way if something comes up, I do have a right to ask you for that money as far as the appraisal or the inspection.
So you're proactive in that area as well.
Exactly. What I'm doing is when I put together a contract, I'm looking at the property, I'm identifying all the things that are wrong. Whatever I see, I try to negotiate that all up front.
Okay.
Remember, my job is to protect my clients. That's what I do. At the end of the day, you guys are the boss. I report back to you and I tell you the pros and cons. Okay?
Yeah, there's no egos involved here. We all know that, people out there are the ones that help us get paid. But we're also performing a service. Mm-hmm. So, that's great.
Well, let me ask you this. What is the difference between a pre-qual and a pre-approval letter?
Well, it's kind of the same thing, but a pre-approval letter, if you want to say what is the process of getting pre-approved, what I thoroughly do is I run them through a system. I also really gather all the paperwork where a lot of companies out there, they're just going to get some information over the computer, say, okay, you're approved, and then they don't look at anything else. And it's like, well, why would you not do that?
Now, here's the thing. As a agent, I would always make sure that the lender that they work with, I at least get a conditional approval. And the reason why this is important is because we don't want to be driving out and spending the time and the money and the buyer's emotionally involved, and they are really not approved. That's a big deal.
That's exactly right. And you know what? As a lender standpoint, if I'm looking at it, if I do that, how's that reflection on me?
You're absolutely right.
And it's like if I'm trying to get an offer accepted, and let's say they do accept it, and then let's say we can't get it closed, then they're going to say, you know what, next time that person comes across the board here where he's the lender, we're not going to accept that offer.
And I do want to throw this quick tip in. It's always best to at least get a conditional approval in today's market, because when I submit your offer, it's all about structuring the deal, okay? When you have a conditional approval, it lets that listing agent know that this guy is a bona fide buyer based upon these conditions.
I got a question for you.
Go ahead.
Is it harder to get a home that is listed in above price for the seller to drop in value? And do they drop the value? And how do you overcome this? Meaning, is it harder for them to say, hey, you really are overlisting? How hard is it for them to change their mind on that? Because I had that issue last week.
Well, this is what I do. If we find a property that's completely overpriced, my clients are interested, they want to write an offer. What I do is a comparable market analysis to the property. We pull a full report to see what that property is actually worth. I tell my client, hey, this is the most that you can go on this property. Anything above, you're redlining. At this point, you're taking the chance to lose this money. Then once that offer is submitted, it's really up to the seller if they want to accept it or reject. It's not my duty or obligation to convince them to reduce the price.
Gotcha. Question for me.
All right, let me ask you this here. The approval letter. How long is the approval letter good for?
60 days. And you know what? If you're somebody that I don't feel is a high risk, I'll just call them up again and say, you know what? Anything changed? Do we need anything else? I'll get updated bank statements, like I said, pay stubs, things. But just to keep the approval letter in good tact.
Okay, and are you pulling that soft pull again?
We don't pull the soft pull
Okay.
unless it exceeds the days that the credit report expires.
Okay.
So that typically happens after a certain period. But yeah, no, we don't do that because we want to keep their credit intact. I got one last question. Is it harder to get closing costs written in the contract for acceptance? We had a couple of people that needed that grant program. Is it harder to get those accepted by the seller?
Well, it depends what the asking price of the property is. If it's just redlining at the appraisal price, it's kind of hard to submit an offer above it and ask for closing costs. So it just really depends, and that's why it's so important to sit down with our clients and we take a look at their complete financials, because once I know exactly what's going on with their personal life, I know how to structure the deal, because every deal is never the same.
Doug, who won that?
That one?
Yeah.
You know what?
Give me the call, Doug.
I think, you're going to be a little shocked on this, but I'm giving it to you, Dan.
I knew it.
I'm giving
Doug,
it to
I seen
you.
your head nodding every time I had answered those questions. You're like, you know what? You're doing good here today.
Yeah, you're doing good, and I love the explanations of the people out there.
It's perfect, right?
Well, I think he won because he's the host of the show.
No, man, Chuck.
Hey, Doug, I'm going to give you a $50 coupon for dinner tonight for your wife, all right? So I appreciate that.
Oh, not for both of us, just my wife?
Just your wife.
She's going to go by herself.
She's going by herself.
I want to tell you, everybody at Nova Home Loans, why we're better than most, what we offer that's different, and I think these are the important things that that most of my competitors don't have. It's in-house underwriting and funding. It's very important. We also have the ability to meet and beat close of escrow. Status online progress updates. I give you checklist emails every single time or every single week that an event occurs, including my Tuesday status call updates. We do have an appraisal management company that's very efficient on getting appraisals back in a timely fashion. I can't express that enough. We have 12 bank options, which is more than really anybody in the state of Nevada. We have every loan product that's out there except hard money, so there's really no reason why we can't get your loan done. Also, we're available 7 days a week, Chuck and myself. And, also, we give away free from this show only. And we're going to have the free PF Chang's for 2 given away here. Doug's going to take a hold of that here in a little bit. Also, we give away a down payment assistance program. I'm going to tell you that the Home Affordable program, we're giving this away a lot, where there's a lot of people qualified for this, and I highly recommend looking at that. There's no down payment. You have to have a little bit of money coming into it. That's for any overage, but like we said, Chuck's getting those closing costs.
And we helped a lot of people with this program.
Yeah, and we also have a free CMA. What's that, Chuck?
It stands for Comparable Market Analysis. This report helps buyers and sellers to identify a value of the property. This will show you everything that's for sale, contingent and pending, and sold status.
We give away a free appraisal to this show only and a free home inspection. So if you're still listening to the show, I want you to take advantage of that. We also have a first-time home buyer's guide. What is that, Chuck?
Basically, it's actually a great book. If you're a first-time home buyer, this will lay down the foundation step-by-step to home path to home ownership.
Path to home ownership. And also we have free consultations. And I told you this is very good education, sitting down with us and giving all the options out there for financing and real estate. This is Dan French with Nova Home Loans, and I'm here with Chuck Cruzwa from Simply Vegas. We want to say thank you for your listenership. And again, you guys make the show. We're here to make you guys smarter home buyers and smarter home shoppers. We'll talk to you next week.